Welcome to Strategic Business Building, the podcast for entrepreneurs and small businesses who are changing their world one strategy at a time. As a business owner, I know you're part of a dedicated group of amazing business people passionately focused on running your business. It's not easy, I know. I'm Jame O'Brien of your online marketing team. For over 20 years, I've helped entrepreneurs just like you grow your business. And I started these podcasts so you can get quick strategies that work. Stick around to learn more. Hello, and welcome to episode 235 of the Strategic Business Building Podcast. I'm your host, Jame O'Brien, and today we have with us Craig Cody. Welcome, Craig.
Oh, thank you for having me today. I'm very psyched.
So Craig is a certified tax coach, a certified public accountant, business owner, and former New York City police officer with 17 years experience on the force. In addition to being a certified public accountant for the past 15 years, he is also a certified tax coach. And as a certified tax coach, Craig belongs to a select group of tax practitioners throughout the country who undergo extensive training and continuing education on various tax planning techniques and strategies to become as well as remain certified. So we're getting to at the end of the year. I imagine our listeners have guessed what we're going to talk about, but we are going to talk about taxes and what you can write off. So this is fun.
It's fun every day for me.
So, Craig, let's start with what's going on in Washington right now. They're talking about the tax reform and just simplifying our taxes and can you give us some guidance on that? Is that something that we need to if it goes through? We don't know if it's going to happen, but when will it take effect? How will that affect us as business owners?
It looks like it will not take effect until January 1st of 2018. And my thoughts are, we don't know what's going to happen. We don't know if it's actually going to happen. And my thoughts are, plan for today, leave as much flexibility in your plan for tomorrow.
Okay. So don't count on it.
Yes, don't count on it because, it's like you may think it's one thing when it turns out to be, like just for instance, they talk about this pass-through tax rate of 25%. But when you get into the nitty gritty, it's this pass-through tax rate of 25% is really only 30% of your pass-through income. The rest is taxed as it is now. So it's not such a wonderful thing.
Okay. So, Craig, as business owners, what about our personal stuff that we use for our business, like our house or our car, things like that? How much of that can we write off? Can we write it off?
Right. Well, you're allowed to write off the part that's for business use. So you should document what you're doing, especially when it comes to the car. You want to track your mileage. Whether you're using the mileage rate or not, you want to track your mileage, so that'll determine what percentage is business, what percentage is personal. As far as the home office, you need a space that's used exclusively for your home office. And you need to spend about 14 hours a week in that home office for it to qualify. And it's not a huge deduction, but the wonderful thing about the home office is that it then allows you to use your vehicle to commute from one office to the other. All right. And it also opens the opportunities for things such as the on-premises athletic facility, which could be your home gym or your home pool. That's for the exclusive use of your employees and their families. So it opens up the door to many things.
Mm-hmm. So, you talked about the keeping track of your mileage. What about, how do we do that? What's the best way to do that? And then what part of that mileage can we write off?
So you can write off the business portion. So if you're using the mileage rate and you're using it for a vehicle, you have to use that mileage rate until you get rid of that vehicle. If you're just using the mileage to figure out which part is personal, which part is business, You're just using that to gain a percentage of your expenses that are actually deductible as business expenses.
Okay.
And
then, go ahead.
I'm sorry, there are a number of apps out there that you can use to track where you're going and stuff like that. I don't recommend any one in particular. People kind of use whatever works for them.
Pen and paper.
If that's what works, you know what? Because it's all on our calendar where we're going.
Uh-huh. So what about giving to charity and getting a break on the taxes through charitable giving?
Right. So that's a deduction. Typically, it's really not a deductible expense for the business, depending on the type of business you have, but you get that deduction personally, so it works out the same way. And you typically need to make that deduction before December 31st.
Okay.
There are times, I believe, where because of like natural disasters, the government has come out and said you can make that, like say there was a natural disaster in January, they may say that, if you make that deduction by January 31st, we'll let you deduct it from last year's taxes.
Okay.
But normally it's December 31st.
Okay. Are there like guidelines around the charitable giving? Does it need to be a check? Can it be like PayPal, or what kind of charities, or can you donate items?
Well, you can donate items, and then you have to you only get to deduct the fair value or the fair market value of that item. You should give it to a qualified charity, right? So typically that's a 501c3 charity. Cash, check, PayPal, as long as you have documentation where it's going, and typically the charity is also going to give you a receipt and potentially a letter documenting your deduction. So, and the real reason behind that is you may send your kids to some type of parochial school, and the IRS wants to make sure you're not, making a Sunday donation or claiming a Sunday donation for what you're actually giving to pay your child's tuition. Okay.
That makes sense. So what are some deductions that people maybe don't think about that they could be deducting and keeping track of?
Well, let's talk about the biggest mistake that they make. How's that? And that's failing to plan. People are going to buy a car. They go out. They do some research. What people do is, if they're not being proactive, they go see their accountant, their CPA, their preparer in February, March, or April, and think, okay, I've done everything I can. They've actually done no planning. Whereas if you take some time, you might be able to save some substantial tax.
So we're almost to December. Actually, by the time we air this, it'll be December. So what are, if somebody hasn't done any planning throughout the year, what would be some advice that you could give them to kind of go back and make sure that they're getting the legitimate deductions that they can be getting?
They should contact their CPA or accountant and say, what can I do now to help me save taxes, before the end of the year? What am I doing in my business that I maybe just change a little bit, maybe, or take advantage of the tax code and keep more of what I'm making? Okay.
What about like retirement funds and putting away for retirement?
Right. So depending the type of entity you have, sometimes the contributions need to be made before December 31st. Some of them have to be made before April 15th. Some of them have to be made by the time you file your tax return. So if you have a 401k, you need to make your deferrals before the end of the year. If you have a self-employed pension plan, you have up until the time you file your tax return. So, but those are discussions you should be having with your professional now versus waiting till later.
Now, so Craig, you're in New York. Do you only work with businesses and, are your clients only in New York, or can you work with them from all over the United States?
We have clients on the West Coast from Oregon to Southern California and as far east as Puerto Rico. So we have clients all over the country.
Okay. And what would be, to prepare for 2018, what advice can you give people so that when they get to the end of the year, maybe they're not scrambling trying to gather up receipts and they kind of know where they are? What would be some advice that you can give them to follow for next year?
Well, I would say start today, start doing some planning, track your income and your expenses. You could do it yourself. You could hire somebody to do it. Typically what we find, people that don't do it until it's time to file their tax return typically miss a lot in the way of deductions because you can't remember that far back. Whereas if you stay on top
of heck, I can't remember last week.
Right. So that's the reason why you want to be proactive and really looking at what can you do for 2017. Okay, there's 6 weeks left. As of airing, there'll be like 4 weeks left, but there's still time to plan for 2017. Reach out to your professional and see what you can do.
And if you don't have somebody, find somebody that can help you.
And find somebody that's going to communicate with you.
Yeah. Okay. So we've got a couple of minutes left. What do you want our listeners to take away from today's podcast? If they take nothing else away from it, what do you want them to get from it?
It's really important that you communicate with your professional, because if you don't communicate with him or her, they cannot help you. So you need to communicate with them and they need to communicate back with you. So don't look at Don't look at it as, if I call my accountant, it's going to cost me money. Look at speaking with the right CPA accountant as, it's really an income item, not an expense item.
Okay. And when you say communicate, so what types of things are you talking about? Were you talking about, a big purchase that you want to make, or, selling property, buying property? What kinds of things do you need to call your CPA or accountant for?
You should be communicating with them on a regular basis so they know when you're looking to purchase something, when you're looking to sell something, how your business is doing, how they can help you, in a more effective way. Sometimes people, they're running a business, so they're doing things a certain way. And if they communicate and they have some back and forth with their CPA, they may show them a more tax efficient way to accomplish the same goal.
Mm-hmm. And I firmly believe that, as business owners, we are good at what we do. I do marketing. Numbers and bookkeeping is not my thing. So definitely bring in those professionals that is their thing.
Exactly. And whatever it is in business, outsource those things that aren't your specialty. Get it done efficiently, and that's really the way to go.
Absolutely. So Craig, you have a free gift for our listeners. Can you tell us about that?
Sure. Yes. It's my most recent book. My first book was Secrets of a Tax-Free Life, which I co-authored. That was actually an Amazon bestseller. This is my second book. It's called The 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. And we will give you a link, and we will, any of your listeners that, click on a link and fill in their information, we will send a free copy.
Awesome. That is great. So to learn more about Craig, to find out how you can connect with him on social media, and also to get the link to the book, you can go to strategicbusinessbuilding.com/235-Craig. Again, it's strategicbusinessbuilding.com/235-Craig. And Craig, thank you so much for being on the podcast today and sharing some tips to our listeners to pay less taxes.
Thank you very much for having me.
And to our listeners, thank you for listening and have a great day. Thank you so much for listening in today. You can find details and links for this episode and other episodes at strategicbusinessbuilding.com. No matter how you listen in, be sure to subscribe so you don't miss an episode. And as always, I'd love to hear your comments and feedback. What tips are you going to implement today? Join us next time for more strategies to propel your business to the next level.